Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a lifelong real estate investor, advisor, and coach, as well as the founder and team leader of Streamlined Properties. Whether you're looking to start from scratch, get to the next level, or just for a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Do you sometimes get lost on social media in the real estate investing hashtags, wondering what is real and what is not? How do I find a coach, mentor, program? Who's doing it the right way? While I don't have all the answers, I'm about to bring you an episode about the holistic approach to real estate investor coaching with Master Coach, and now our second-time guest, and honestly, she's been on the program 3 times because she interviewed me for episode 100. It's Alyssa Holbrook. We're going to talk deep about the humanness of real estate investors and investing and how coaching can change the game, and it's not all about what's on social media. She's really good at social media, but if you compare that to what clickbait is, you're going to see a difference. Now let's hear the difference. Let's go. This is episode 148 of Zen and the Art of Real Estate Investing with my guest, Alyssa Holbrook. Alyssa helps first-time investors and seasoned experts create passive income and generational wealth by teaching mindset and strategy of real estate investing. And P.S. Alyssa is our first 2-time guest, not counting episode 100 where she interviewed me, but Alyssa was first on episode 34, where life coaching and real estate investing meet. And now she's back for a second time. Alyssa, welcome to the show. Welcome back.
Thank you. So glad to be here.
Yeah, I feel like we need to some confetti to come down. But yeah, you're a very important second guest. We're obviously very good friends, and we've become good friends. And we were talking just before. I didn't even know you when I interviewed you back. The episode came out in March, but we recorded it well before that in 2023. Why do you think on a mindset level, we've become such good friends and talk so much about real estate investing?
I think because we just see the world in the same way. Like when you see that mindset is the thing behind being successful in real estate, the ability of who you have and to become in real estate is huge. So we both view real estate as a transformational experience, and real estate's the vehicle whereby you're changing, having more awareness and becoming that version of yourself that you want to be.
Yeah, I love that. It is the vehicle. We were just saying that. And I think that's what is missing kind of in the mainstream or shiny social media portions where it's like, buy real estate, get money, your life's great. I mean, we both know that it doesn't go that way. And I think that mindset is something we're going to talk about a lot as it relates to how it can really help people. But in terms of your training, you're a coach now. On the first episode, you were really kind of just starting with coaching then, right? I mean, you had a few clients, but now that's mushroomed a lot in the last more than a year. What type of clienteles are you taking on now? And how important is this one-on-one relationship from you to client? Because I think this will help people understand what true coaching is really about.
Yeah. Okay. So I started coaching in 2018 and I had clients all along the way, 10 to 15 clients. But what changed along the way was me. Yeah. I was being coached and changing, and my process was changing. So yes, a year ago, that was more into the real estate side of things, that's where I was getting more specialized. And I would say the tools that I have for sure have changed. There's just processes developed for so many different things where I feel like people can ask a question and it's like, oh yeah, I've coached someone on this before, most every single time. But the type of clientele that I work with is really interesting. That's also evolved. At the beginning, it was mostly people wanting to do house hacking and kind of smaller investing. Now, it's people with, often a $5 to $10 million net worth. Sometimes they just have a $2 million net worth or something, but They're often ER doctors, an executive at T-Mobile. Like those are the types of clientele. And so that's changed a little bit, including some people getting into syndications and things like that as well.
Yeah. Do you think changing your mindset on who you wanted to coach helped you grow that? Because I think for some investors, if we both think about new investors, if you think you can only do house hacks forever, you may, I mean, which is fine. If you like house hacking, cool, but that means you have to live there. So did you increase your mindset? And is that something we can help, other people do in terms of seeing when they can go bigger?
Yeah, absolutely. So I think I had a thought that they had different problems. And that may be applicable to people with what they're investing in as well. Like you might think that going bigger requires something different rather than believing it's actually easier to go bigger and to buy and scale, right? Like the clientele that I work with now, they're on time. Like there are so many things that they just have this mindset of growth and like teach me what's possible and I want to go for it. And I think that's the best type of fit for my real estate coaching because I'm very opportunistic. I'm very future thinking. I'm very out of the box. So it's like, what can we do and how can we make something interesting happen? I have processes, but I'm less like follow this exact model focused, which is why I do private coaching. Like that's why it's so personalized. And why
I think that's the benefit of the one-on-one is that each person is treated differently. And that's really how it is because everybody's journey is completely different. Their why could be a little bit adjusted, although it usually ends in what we know as time freedom, but they may not understand what it is yet. Have you seen anything change though since the last time we had you on the podcast in terms of like what investors are looking to do with their money? And what they're looking to get, and just in terms of help, whether it be from coaching or from any programs, because the market's been weird with rates staying so high between these two recordings. People have had to finally adjust and say, I have to stay in the market, so I have to adjust to these rates.
Yeah, that's one of the things I've been thinking about and even wrote a post on the other day was sometimes it's just looking at the very best 4 deals that you can find, looking at those side by side, saying, this is my favorite one of these when I consider the risk and the reward and the cap rate and all of those things. And then saying, I'm going to go for that one or I'm going to sit it out and continue looking, but never stop that process of looking and moving forward. And the second thing that I'll say is the thing that's changed for me and that may set me apart kind of in terms of how I'm coaching people is understanding that we're humans investing in real estate. So from that interpersonal perspective, like we have experiences, we have beliefs, we have things that have happened to us in the past and our own individual way that we move through the world. Like I think you and I recognize that we are each investors, but we move through the world in a little bit of a different way, even though we share same values. And with that, we're taking into account the whole person. So that's something that I'm specifically trained in is like, if you are experiencing, money beliefs that are not serving you, how do we actually shift those that are deeper level than just our thinking and just our brain? It's actually somatic body work. How do we change?
Do you think that the majority of limiting beliefs start with some idea about money?
Actually, no. I think it's a lot more related to self-worth. That's such a good point.
Yeah. That actually makes a lot of sense. I think it morphs into what they think is a money thing. But it really sometimes it comes from scarcity mentality for how somebody grew up and their parents. But a lot of times just people are weird about money, right? And I think that does go back to self-worth, the feeling of what money means to somebody instead of if it's, like we've said in the beginning, a vehicle to get somewhere.
Right. That's so true. And I think sometimes we actually overvalue money, like the money that we have and that we have to invest. We spend inordinate amounts of time scouring deals, analyzing them, listening to podcasts, thinking that we need to know more. And in a way where I used to experience this where it's like, I think that there's something special that I'll like find a deal that doesn't align with market conditions. And I like want to keep searching and searching and searching for that deal rather than being like, that kept me from investing for 3 years.
Yeah, that makes sense. I do feel like I remember I was just replying to something. When like a brand new, any type of new-ish investor comes to you and they say, I can't believe this deal is too good to be true. You're like, I mean, it is too good to be true because you're missing something. Because usually when a deal presents itself like that, it's been sitting around, which means all of the experienced investors have already passed. But that kind of like oh, I can find the needle in the haystack. It's like, you don't have enough experience yet to find it. You don't want to really, that must be a hard part though of coaching, because you don't want to detract someone from being, in action, like they're taking action, but maybe it's on the wrong item. So how do you start to differentiate what's the best thing for investors, whether they're new, experienced, to really spend their time on? You talked a little bit about whittling down the deal to one and then seeing if that works, but what other things can help them focus on kind of the right things instead of doing something for a year and then realizing well, that was a mistake. I just basically killed a year focused on the wrong things.
Right. Okay, so I've been thinking a lot about perfectionism today.
Yeah.
And I think I just want to start bringing up some of those things that we show, because I know I still have a perspective that like perfectionism is a good thing. It's something I've hired coaches and worked on for literally 6 years, and it still lives in my brain. It's the number one thing that I struggle with for sure. And so I think that shows up in ways that people don't actually experience it, and or that they don't know that it's perfectionism. And that perfectionism is actually costing them deals, money, time, energy, agony, concern, and worry. And so I think it just would be fun to kind of go through what these things look like and how we secretly think it's good to be a perfectionist.
Yeah.
One of the things that I see that we were just talking about is looking for like a 12% cap rate or something, but not wanting the property to be in a dump or in a less desirable area. I have some clients right now who just made an offer on, it's like a DaVita dialysis center in Alabama, and it's not a great area. And it was so good because I see them being real about it. They're like, all right, this is the fact of what we're getting. Their return's higher than 12%. It's awesome. And they're like, yes, but this is the asset that we're buying, and we recognize the risks that go along with that, and we're willing to move forward because we want our financial goal. I have another client who just bought a brand new home that is returning very little, but she doesn't want to deal with the issues.
Yeah. And those are both good investments because they're vetted. They've taken the time to decide what matches what they want. And that is important because that one deal, like, your 12 cap, that's not a perfectionist deal. And to your point, somebody could look at just the cap and say, oh, well, this is a home run. I mean, it's a home run if you want to do a lot of work. So that's part of trying to figure out. And as long as they, have the transparency of what they're capable of doing, then I guess it does make sense, right?
And sometimes you can overcome the work. So like for them, they're willing to take intimidation and strategy over work. So it's a multi-tenant property, and one of the tenants only has like a few months left on the property or on the lease. And so by them deciding to take on that risk, but saying, oh, here are the people who would be a good fit for this, and we feel confident we can put a new tenant in. And then also saying, well, it's a triple net property, and so they just have to maintain the structure and the roof's replaced. Yeah. Like they know how they can minimize their downside and minimize their risk, though the area and maybe the clientele isn't their favorite. So,
yeah, but like you said, it's triple net. So for triple net, you're going to have more occupancy issues or more vacancy issues, but then you lock in for long and hopefully they pay and you're pretty much out of it. You don't have to do anything. So, that does make sense. So what are a couple more things on this perfectionism list that we can help people not get into the rabbit hole? Because if they just did, then they'd be saying, well, rates aren't perfect. So a lot of people will say, I'll just wait till rates get better. And my response is, I want to get your take on it, is like, well, how long are you willing to wait? And what crystal ball are you using to know when rates are going to be, quote, better?
Yeah, right. They just released that they need to see several months of, better economics before they want to decrease those interest rates. And so I think for people, I notice something happening, which is deciding their next property and saying like, okay, I'm going to choose a multifamily BRRRR property. But then when it gets challenging, you're going to abandon ship and you're going to start running numbers on multifamily or on midterm rentals or on short-term rentals or something that's not within your buy box, just because you don't want to experience the difficult emotions that come up. And that's the thing I think is so interesting about perfectionism is, and I'll get to that in a second, but it's really because we're avoiding emotions. So I can say what those are in just a minute.
But I like to avoid emotions. That sounds great.
Especially the negative ones, right?
Yeah.
I see people like This is one that I really deal with as well, is wanting to know every detail on a property before you
that's a great
even
one.
make an offer, right? And you can just spend so much time thinking like, is this the best property? Is it the best property that I could possibly get? Is there going to be a better property in a year? And never move forward and kind of find one little thing that's wrong with it and justify not making an offer. And so it just keeps you out of the game when in reality, that property might have been just fine. And 2 years from now, they're probably going to be worth more.
Yeah, if I ever get like 13 questions before we even submit an offer, and they're all basically on the due diligence portion, whether that be traditional home inspection or, vetting on commercial, you're like, you're not prepared for this. Because you can't have that many questions, or you need to go see it again. But there's something that you're missing. I think that some people want to eliminate the risk, and that's perfectionism, but there's always some form of risk. The cool thing about real estate is it's tangible. So you can see it. So you can evaluate the risk that you know about in almost all forms up front. And part of that, to get to that due diligence part, usually you have to agree on a contract to move to that stage. And I think you're saying we're saying the same thing. Like they won't commit to that contract because they want to know X, Y, but no one's going to know X, Y until you make a commitment, because they feel like, well, if I commit, then that's it. I'm going to lose my deposit, or like they're just not prepared. How do you think about that?
Yeah. And it's important for them to know how to protect their deposit, number one. But then the other thing that I see is people making low offers that are like a safe offer. And I have the tendency to do this too. I'm like, well, I'll just slide an offer in at this low price. Like, if I get it, it'll be awesome. But that also is kind of perfectionism, because rather than saying like, yes, I would actually be able to buy this property and I want it at this price. I think about this like with clothes. If I wouldn't pay full price for it, it's probably not the shirt that I want. Yeah. And so find properties that you're really into and that you really like, and then go ahead and make the offer. And this is a funny one, and you might disagree with me on this one. I'm not sure. But sometimes I'll write an email to the broker with the offer, and I want to take like 40 minutes to write out like every single thing, because if I write it out clearly enough, like they'll actually say yes to that number.
Yeah. They might not read it though. I mean, to me, if there's no competition and you're sending a low ball, then you have to explain the low ball. Sure. But there are the people who are just sending low balls, which is a bad use of time. But surprisingly for me, like I actually don't make low offers. I keep testing them either through myself or through another agent if it's out of the state, to see what they're going to do. And I've been doing this repeatedly in Florida, and they're just like not moving on their price. I'll say, well, ask them what their bottom is. And then they'll say a number. I'm like, well, that's not close. And then a month will go by, and then they'll reduce to that number without even calling us. I'm like, you're really missing the point here. Like, just tell me what the bottom line is. But everybody's just trying to get that little bit of edge. So I usually just pay, what somebody wants if I like it. And I'm more mild because of my experience on the due diligence. Like, I kind of know there's going to be some hobgoblins in there, and that's fine. But I can really see it on the perfectionism. We see it with spreadsheet warriors. They're running everything through a spreadsheet, and it's like, but also on that end, all you have to do is adjust one number on a spreadsheet, and then things work. So like, it's like they can say no, and then all of a sudden when they decide they want to say yes, all you have to do is like, oh, well, just change the vacancy rate. You're like, oh, well, now it works.
I love that. A coach once asked me, why are you trying to not make this work? Or why are you trying to prevent a decision? And I think if you're a spreadsheet warrior, that might be something that you ask yourself. Zoom out for a minute. This is the mindset piece. Get out of the weeds. And am I actually willing to make this work? Or if I were to buy real estate, like, what uncomfortable emotions would I have to feel? And maybe that's a good segue. Obviously, we have more things that we could talk about with perfectionism. But here's what I see is sometimes we have to experience regret because things didn't go as planned. Yeah. Definitely in terms of investing in inspections. And then sometimes those inspections show things that you didn't want, but there's no way to know without moving forward and doing it and taking action. I think sometimes you have to feel embarrassed, especially when you're starting out, if you say the wrong thing.
Yeah. I mean, I think you have to be okay knowing what you know. And the more that you try to, puff up what you know, the more you're going to get yourself in trouble.
Totally.
Like, just be upfront. Like, I don't know that much, but I am going to talk to somebody who does. because you're just going to fake it. You can't fake it till you make it in real estate investing, because you're going to fake it into a horrendous flip and lose your money. That's the way that I see it. You can be in the room all the time, which I think is great. That's a kind of way that people would say fake it till you make it, like show up, but you don't have to pretend like you have 10 properties, when you don't.
Yeah. I think experienced investors, this is probably a misconception, but experienced investors, I actually think, really value that learner mindset. When there's someone who's like, I acknowledge that I don't know it. I'm here. I'm doing everything I can to make the deal a success. And like, this is my next step. As a side note on the embarrassment thing, it was making me chuckle because every time that you level up, you experience bigger emotions. Like it just happens. And I was making an offer on a deal that was several times larger than other things I had offered on. I called the broker just to say, hey, reach out to me. I'd like to make an offer. I literally forgot my phone number.
Like, that doesn't sound like you.
It doesn't. No, it doesn't at all. But every time that you're, when you're getting to like that 10 million, 20 million, sometimes you just surprise yourself that you don't feel like you're on the same plane. And that's always an idea of like, okay, I could do some mindset work here because I always negotiate better and I always have a better experience when I feel like we're equals. And that's really just something that imposter syndrome is really created in your mind. So
yeah, I think imposter syndrome plays a big role. And then I think probably more notably with men, they try to overcompensate to beat the imposter syndrome. And it's almost like comical because you can see it and you're like, but you just told me that you only have, one condo. So why are you you're getting a 16 unit? You don't even know if you'd like to be a landlord. These things aren't going together. Do you think, let's just talk about landlording for a second, because when you're talking to new clients who want to invest, a lot of people, they're watching a lot of multifamily things. They probably have a lot of money. It sounds cool to have like a 70 unit apartment complex, but then you ask them and they have no idea what the management's going to be, or if there's vertically integrated, or what they want to do with property management. How are you gauging somebody's like actual personality to make sure that the personality is matching the assets? Because I think that's pretty important.
Say more what you mean by personality. Is it based on how much they've done?
No. So for me, me, I can talk, but I'm not necessarily a people person. I don't want to like have direct contact with tenants. I'm not a great landlord. I know that I'm going to pay to put that out, but also I want to make sure that it goes correctly. So for somebody who says they're not really good at record keeping or something, and they want to take over self-storage, you have to pay to be more passive. And I think that can be a problem. So personality may be more like disc test personality. High Ds are going to be less invested in the details. So they need somebody to help them be in the details. But your high C is going to be all about the details, but might not see, the personal one-to-one relationship that they can build with someone who's a mom and pop owner to make that deal happen.
Right. I love that. Definitely knowing whether you're more of that numbers systems type person or like a relationships space type of person is really important. And
this is you versus me, by the way. Yeah.
It is. I love it. But I think there are types of properties, and then there's also like the strategy of investing. So like a limited partner, I don't do well with being a limited partner just because of my expertise. But B, I was raised in a self-employed mentality. And so sometimes the mentality that got you to where you are is actually what's going to keep you from going to the next level. Like for me to be able to scale and to be able to 10X, I'm actually going to have to let go of that self-employed mentality. But for me, where someone else is a doctor and they're amazing at what they do and they love hiring experts, they're going to be best as a limited partner where they don't have to learn every single detail. And because of the way that I see the world, I used to think it was right for everyone to be an active investor. Now that's not my truth. That's not what I believe. But for me, I love putting the deals together because I'm I can deliver. And I actually like being the sole person who delivers and then seeing and supervising and hiring out the other pieces. And so I think it has to do with if you're a flipper and you want to just do project after project and you want to see it from start to finish. And if you're willing to hang with like managing contractors, like some people just don't have the patience for it.
Yeah, I think that's transformational because I'm a control freak as well. But I finally invested in my first syndication and I love it. But that's because I trusted the operator, knew the operator, and knew like, hey, I'm hands off on purpose on this. It's almost like handcuffing myself so I can say, well, that income's coming. I don't have to worry about that. Now let me focus on a couple projects where I can maybe have a little bit more control. Because wouldn't be the type that someone would think would be good as an LP, but I'm greatly enjoying my first ride on the LP train for sure.
I love that. What do you think you enjoy most about that?
I think that exactly what I signed up for is exactly what I'm getting. And also the deliverables, and this is from Drew Brenneman, who's been on the podcast before of Brenneman Capital. The deliverables are exactly what I want. I can read the monthly update. I can see everything that's happening. I can see the rent increase. I can see the growth. I can see the expected returns over the long haul. And then I can also watch other, full cycle deals close and go, this is doing well. Like they know what they're doing. And that's why it took a long time to get into it. But I think it's just a trust value going in. And that's where I think, look, there's a lot of syndications going sour right now, but that's because people were just throwing stuff in. I mean, some people are obviously affected by the market, but, I always want to know someone has skin in the game. That's really important. We talked about that, when you're looking at large scale, it's like, who has money in is really important to me because then at least we're in the same boat,
Yeah. Yeah. And I think you're speaking to, you knew yourself and your strategy to know exactly what you wanted in the person that you partnered with. And I think for me, like some of my clients have decided that they want to partner with me. And when we partner together, it's because they want mentorship and they want full transparency. It's almost like they want to see behind the scenes on a deal. They want to meet me there. They want to walk it. Like that's the type of trust. That's what trust means to them. And that they want mentorship. And so they see that as a huge upside.
Yeah, I this week specifically, I've been talking a lot about mentorship. Do you have advice for people who want to find mentors? Because I feel like the most common question out there, or the way that people phrase it is, hey, I'd like a mentor. Does anyone want to chat? It's like, no good mentor is going to just pick that up and run with it. Oh, sure. Like you're going to get everyone who's trying to sell you a coaching program on earth. And it's just a bad use of our time. I was having this mini forum argument with someone who's like, well, I have 20, they literally just asked that. And then they said, well, I have 20 people in my DMs who want to mentor me. I'm like, well, just wait for the pitches because it's not going to be anybody good who reads, I want a mentor and they respond to you. Yeah, I'm up for it for free. I just want to talk to a stranger. Let's go. That's silly to me. How can you help people find the right mentor? Because I feel like finding the right mentor is like pre-coaching. You just want to find somebody, but I don't think they're delivering themselves in a good light because it's a one-way ask for most people.
Yeah, I think I would just ask, why are you wanting something for nothing? It's kind of a old way to put it.
Yeah.
But my dad helped me yesterday. He's a commercial appraiser. He's been an appraiser for 30 years and he took a couple hours out of his day to help me. But he's my dad.
Yeah, right.
For the most part, I mean, I don't think I would ever go approach someone without having some type of a value add and saying, what can I, here's how I can add help. Here's how what I can contribute to you. Maybe it's money that you have to put in the deal, or maybe it's some expertise that you have in systems or in operations. Exactly. But in general, I think what makes sense is actually just hiring and vetting a coach. I would just say that is your mentor. A lot of people think of my coaching as mentorships because that's essentially what it is. But there's a value exchange in that is set. And then that the mentor, I don't know, I just see it as like karma. I just see it as like energy. There's an energetic exchange there. And money is the way in which we do that. So I would really ask yourself, why are you trying to get something for nothing?
Hey, it's Jonathan. On this brief interlude, I want to give you an update because our new website has launched. zenandtheartofrealestateinvesting.com is live and you can go there and check it out. I really want you to go check it out because we're going to still be upgrading more, but it's going pretty well so far. This is a very guest-focused podcast website. Each guest has their own profile with their own links to our 10-minute clips on YouTube, and also links to the episode. You can search for guests using the alphabet, or you can search in the search bar. Soon we're going to have tags up as well so that you can search in certain categories: short-term rentals, mid-term rentals, syndicators, multifamily, and then you'll be able to link to the episodes on that. I have really put a lot of time into working with my team to get this website to be extremely visitor friendly and very guest friendly. I hope you enjoy it. at zen&theartofrealestateinvesting.com. Let's get back to the show. Let me get your take on this because I've said a couple times this week that if you show up long enough, whether it be at meetups or groups, and you're involved and you're meeting people, after 6 months of consistent meetings, you're going to find a mentor. You're just not going to have to ask someone to be your mentor. You're going to find this win-win relationship because you're a participant who's adding value. You're not asking for anything. I feel like once you ask, you're asking to get pitched. And I don't like to get pitched, as you know. So it's like, I'm just going to build the relationship. And then when you say, hey, you want to meet up for lunch one day, it's not, hey, do you want to meet up for lunch so you can teach me all about real estate investing? It's like, I like you. Let's meet up for lunch. Since you both invest, like you're probably going to talk about investing, but treat them to a meal later, not in the beginning with this, hey, do you have 15 minutes for coffee? Like there's nothing I would want to do less than that other than like skydive, like I'm not just going to take someone up. I don't need a coffee. I don't drink coffee, but I could get a tea on my own. So what's in it for me, I think, is fair on a mentor side.
Yeah, for sure. And the really good mentors who are further along the way probably won't take those calls.
Yeah,
for the most part. Unless, I will say, if there's a caveat, which is sometimes people are at a point in life where they just want to give back. And some people are that way all the way through as well. Like, I'm pretty happy to spend some time talking with people and just like I'm helping people through divorces. I do my Ask Me Anything every week, right? And people love participating there. So there are lots of ways that you can get some free mentorship, but it's not generally going to be within a container. And I think understanding the cumulative effect of having a 6-month commitment, meeting every single week, and the accountability and responsibility that comes along with that, it just has such power to move you forward where you're becoming aware of something and then shifting it. And then you tackle the next thing and then you shift it, constantly making offers and analyzing deals along the way. I just think that is such a huge benefit.
I agree. I mean, I'm obviously a big advocate of coaching. I've been a coach. I have a coach. I think it's super important. I just feel like some people in the beginning believe that they're paying for the coach to do everything for them. And they don't understand the coach is always going to be there. But if you don't do your work between, meeting 1 and meeting 2, there's really not much we have to talk about, because you know from general life coaching too, if someone keeps showing up with the same thing, you keep telling them, well, I think this week these are your goals, and they don't do the goals, it's not worth coaching. We're not on a partnership getting anywhere together.
Yeah, you want to constantly be having new problems. And so that's a question that I would have for listeners too, is like, how long have you been dealing with whatever problem that you're working with? And really asking yourself why. Like, why are you staying stuck? And sometimes I think the answer is you actually don't know. Like for me with perfectionism, I could recognize it and it was very painful to see it, but I actually didn't have the brass tacks. This is the process that you follow to become perfectionist. And I wasn't even able to see it until my coach would point it out to me. And it was kind of shocking to me that even me wanting to gather details on deals, like that's perfectionism in disguise. That's kind of shocking.
Yeah. I mean, so for people now, I mean, since the last time we talked on the air, things have changed. Rates are high. People are looking at different assets. It's a different way of looking at real estate. How important is this adjusted mindset for real estate? Because at any point we could go into a different cycle. The economy could change and different markets have different rates. So thinking like, well, I'm looking at a national trend. That doesn't mean that your market, wherever you are, isn't going to be a much better market than the national trend. How do you keep people set on their mindset to make sure that they're in motion? Because that's something that we know is important. Are you still staying in the game? Meaning you don't have to buy a property every year, but you better be doing investing things and vetting ones and saying no to deals, or else you're not getting enough reps to move forward.
Yeah, I think one of the keys is to know when you're in what I call a low value cycle and going and bringing yourself back to a high value cycle more quickly. So know what your version of feeling down or lacking momentum sounds like and what it looks like. And then take yourself to, I like to do something where you write out, like, here are the things that I do know. Here are the things that I know about the market versus all my drama about it. And then second, I would say adaptability is huge. So not being too bent on one thing, like especially I think of that with short-term rentals and Airbnb is like, this isn't the market to hop right in unless you have some edge on the market. And so just being able to change And then I think also sometimes that change is going to involve investing out of state, where there are certain areas that it doesn't make sense to invest from a return basis. And so you're going to be looking at other markets, making sure that they align with your final goal that you want to reach, and then shifting and overcoming the mindset that it takes to not be nervous about those markets and investing out of state and all the uncertainty that comes with that.
Yeah, I think it's really important for people to be adaptable because things change, and inside local markets, they change. I also think that some people get a little bit too adaptable and they just look at everything.
Yeah.
I'll invest in anything as long as it's a good return. That's not someone I'll ever work with, because then I'm making the decisions for them. Just send me a good deal. It's like, well, what do you think a good deal is? I don't know. Just send me what you think. Well, this is a bad use of time. We're not focused enough to get anywhere. So that's like almost too adaptable, right? It's like, and they're not putting in the work.
Right. So making a decision for a specific amount of time, I commit to looking for this exact buy box, this type of property with this strategy that I'll employ at this number in this market, and specifically this sub-market. Think of you as like renting a niche, renting a buy box for a certain amount of time. Go all in on that, and then tell yourself however long it is. And I would say that's at least 4 to 6 months.
Yeah.
Don't evaluate anything. Don't get discouraged unless it's been that 4 to 6 month time period where you really can't find a deal. Because in every sector, people are finding deals.
Yeah, absolutely. Yeah, and you're taking that. I think people would feel like, oh, I spent 6 months trying to figure out if short-term rentals work, and then I decided they didn't, so that was a waste of time. It's like, no, you learned so much. Now you're going to apply that to next. I think that's important, because I don't think you can be successful if you're like, hey, I'm interested in either multifamily, short-term rental, self-storage, or triple net. Like, bro, you can't even evaluate those deals the same. So you're not there's too much to do. You'll never get out of that cycle, or you'll agree to a deal that someone says is, quote, good, just because they said so.
Yeah. And I've seen that happen for a lot of my clients. That's been a recent trend. People come to me who own a bunch of properties, and those properties aren't cash flowing. They're having headache tenants. And usually it's because they trusted the broker and didn't look at the numbers. And so just yesterday, I had a client who said, I want to look over everything that I own with you, and I want to see kind of like the mistakes or like the learning opportunities that I have from what I've done. And then we're going to decide what to do differently moving forward. And then he's willing, and I see this with really clients who make a lot of strides in their investing success, is they're willing to shift. They're willing to change trajectory, especially when it's an expert talking them through and they're getting to the meeting of the minds from the strategy level of things.
Yeah, I think that's a phenomenal idea. And I think there's nothing better to start any relationship of a mentor kind by saying, well, let's put all your properties on a table and let's have a look at all of them. Are they all performing at their best? If not, why? Oh, well, you never did maintenance on these 3 properties, so it's no wonder that they're dogs. So do you want to do maintenance and then earn this, or do you just want to sell them and get your money out of the deal? Like sometimes people are too adverse to taking a loss and too adverse to losing, quote, 3 doors. But if they're bad doors that aren't making money, what are you getting from saying you have 3 more doors?
Right. And I think sometimes choosing to sell is just a matter of accessing capital and sizing up. Exactly. So my dad has this little thing that he says, when's the time to sell real estate? Never. And I would add, unless you're trading up. And he would agree with me.
Yeah. Well, yeah. I mean, there's, if you can ever turn 1 into 2, that's ideal part of real estate. Everyone's in this thing where it's like, oh, well, I got to build and hold. It's like, well, sometimes that appreciation rocket took off. So it's good. If you can turn 1 property and now you can go get 2, you've just doubled your portfolio instead of saying, how am I going to take a HELOC on this and then go get another one? I think people are thinking leverage too quickly, which I like leverage. It exists for a reason, but it exists in high rates right now for a reason as well. So it's a hard time to look at the leverage that you could get. Even like HELOC rates are ludicrous compared to what they used to be, which is in line with everything else. But I think they have to really figure out like what's the best way to do that. And sometimes it is sell and transfer, like you said, sell up, whether it's to a bigger asset or to split into multiple assets.
Yeah. And I'll say the clients who I've had who have recognized the HELOC rates are too high if I were to, you're basically, if you're using that HELOC rate or line of credit as your down payment on another property, you're basically 100% leveraged. And in today's interest rate environment, that doesn't always make sense. And so some of my most successful clients, they just bought a $2 million property in Louisville themselves, right? And they're ready to do some more. But it's because they were willing to sell their primary residence, downsize, and they were just super decisive in doing it so that they could move forward. And they would attest, like their decisiveness and their willingness to change and adapt is what got them to where they are now.
Yeah, I think decisiveness is a really big part of scaling at anything that you do. And whenever someone says they can't make a decision, I always think it's confidence. And then they say, oh, well, that can be self-worth, but it also can be lack of education or lack of research, like putting in the time to make sure that you feel confident. If you get to that part, as we were saying in the beginning, and you're trying to find everything wrong before you just make an offer, like you're not confident about something. Maybe you didn't you haven't looked at enough properties, which I think is overwhelmingly the biggest problem for new investors is they're not getting in-person reps, looking at properties, knowing what they look, smell, feel like. Those things make a difference. I mean, if you say you've vetted 30 deals and you haven't looked at any in person because you're only investing out of state, it would still help you to look in your state. Just go to open houses if you don't have an agent and just see the worst ones on the market or something comparable to what you're looking at. So you have at least some in-person reps about knowing like what a commercial building looks like. I don't think that people, they just don't know what they don't know and they use that as a crutch, but you're not going to ever get to that confidence level without those in-person reps.
I love that. And figure out when you're not going to look at properties. Like I had some clients who are investing locally here. They were buying their own home and they had been nervous to just call a broker who, could walk them through a property. And when we really got to the core of why there was that thought, and what that thought was, then they could shift it. And they went on a contract like within 3 or 4 weeks after actually going and getting boots on the ground. But I think it's such a good point what you were saying about numbers and data, because that is something just for me that I know about myself. And it might be helpful for listeners to think about this too. Do you need a high level of detail and a high level of certainty in your numbers and data before you make an offer? And I think we can really shortcut that time and kind of collapse time in a way using the numbers and data. Like I can show on a CoStar report or whatever type of report we're generating, whether it's a crime report from Door Profit or anyway, all different types of reports that we use and software that we use, but you can get really good and accurate data and that can eliminate a lot of the uncertainty and end up de-risking your portfolio and your properties.
Yeah, and I think you use the data and also the reps together. So say you've looked at 10, 20 unit apartment buildings in your area, but you're going to invest outside. You've now seen, you know exactly what to look for. They're not building a 20 unit that's different. You're going to remember the things that won't show up on the data sheet. So then you become what I always term as an asset hunter, which I think is important, but you need reps to know what an asset looks like. You need to be able to say, I see the trends here that other people don't see. And that's where you start using your own personal competitive advantages on either towns, boots on the ground to help you, right? I mean, if you're flying blind into an area, of course it can work, but you're betting on the funnel that you've built and that can be hard. So I think people are kind of passing on their own resources. As we were saying before, someone who comes to the table for a mentor and thinks they don't have skill, you may have time. Maybe if you're new, you can go for someone. Time is an asset.
Sure.
So also not using where all the places you've lived and other places that you know things about or where your best friends live, those can come in huge because there's an extra level step ahead that you are above other people that you won't have if you just say like pick up, hey, Tulsa sounds good. Let me now go and build in Tulsa.
Yeah. And I think there's also strategic partnerships. So A, you can let your money do some of the talking when you hire a really good inspector, and that's a little further down the road. But B, something that I love is just finding a really good property manager or agent in the area. So I'll give you an example. One of my clients found an agent, and this agent, his mom's the property manager, and he's called every single person that they manage properties for and said, hey, are you willing to do seller financing? And then he knows all the areas. So I've traveled, I'm investing out of state, but I've traveled there once. And so I could tell him, okay, he knew the properties and I knew the properties. And so we could mutually agree. This one's an A area. This one's a B. This one's a C. And then I could ask him about the properties that I was evaluating. Like, hey, is this a C from now we have a baseline together? And so, yeah, it helped to fly out there, even though I didn't end up buying that deal. But then B, I think it's understanding that agent and then having a dialogue and a conversation and finding those gold agents, those that you really want to take care of because they're really working hard for you.
Yeah. And I think it is harder to find. It's why people have cold feet about like, hey, I'm just going to pick up. Well, you just don't call anyone. You do your research first. I mean, there's lots of ways to look for social proof and get vetting from other people. Use local Facebook groups to find somebody who comes from a recommendation of someone that's not just an online representation. Yep. But I mean, it's just like if you're going to stay at an Airbnb, like you read the reviews. And you can tell that they're real. When you read them, you can really tell like which of these are real. I mean, they obviously have to have booked, but it's the same thing. You want to vet people the same way. But you can't think like, oh, all realtors are going to stink. I mean, most of them will, but that's why you're going to really, use questioning and asking people, hey, do you know anyone? Can I get a one-to-one recommendation? I think those are always better. And those both you and I love to give to people when somebody says like, hey, do you know someone in this area? I'm like, absolutely. They're rock solid. Call them right now. I'll text them. I'll put you on a text chain. That's the best way to find someone. And you have to, knock on a couple doors to get there. But I think that's better than just throwing a dart, at a map and hoping for the best.
Yeah, I love that. I think personal recommendations. And the second thing for me, more than reading, I mean, I'll make sure that their bio says something about investing or something, but really it's who has the deals. So I'm trying to eliminate like educational guesswork, passive learning that appears like it's getting you somewhere. And instead, I just want to call an agent who has a deal and ask them about that deal. And then I always ask, do you have any other properties? And you know how much they know right away if they're going to be an asset in this equation or not, when they're like, and don't have any of the answers about their own what looks to be a solid deal. There's things going to be missing in there. And that's important enough just on the vetting mechanism. Like that's not going to be the person that we do this with. Right. Yeah. And I hope we see good agents stick around. I think most of them will. And I want to keep taking care of them because as you scale, you want to have these key partnerships that, real estate is actually kind of a small world. I did not know that before going to, conferences. Like we all kind of know each other and your reputation really means something.
Yeah.
I think that trust and that, those are things that you and I both really agree on. And I think is what makes us so successful is we are trustworthy. And our people see that and feel that and know that. And we feel that from each other too.
Yeah. And I think that's always what you want to look for. In any relationship, you just want to make sure it's a win-win, and that there's a trust level between two people. So you don't have to always be wondering, I wonder if that's true. If you're doing that, you're wasting your time because you have to find something else. You can't really build that up if you're already leery. It's okay if you don't know somebody, but then ask questions that will help vet them right away to make sure that you're putting yourself in a better spot.
Yeah. I talked to an agent recently and there was immediately, once I talked to him, I was just very suspicious. And sure enough, as that deal played out, it was a deal for a client, but I had just done some of the legwork helping her out.
Yeah.
And as that played out, you just could see more and more. We actually looked up his license and he had past action brought against him. And it's like, if you pay attention to your intuition, it's usually spot on. Oh, yeah, go ahead.
Go. No, something's coming. Let's go.
I got really excited.
Yeah.
So this is something that my coach did with me and that I just did with a client yesterday. And it's really fun to see. So when, if you have a mindset where you can argue things both ways, really good at that. I can argue for making an offer. I can argue that price is good. I can argue that it's not good. Don't make an offer. Write out your thoughts that you have, yes, and your thoughts that you have, no. And then write down what you feel, the emotion that comes up for you when you think that thought. So I'll give you an example. The client that I was working with, she was deciding whether she should see the property before purchasing. And as a rule, of course, I've even written posts on it like, yes, go see the property. Right. But in her life, with everything that she had going on, it was her daughter's, graduation, and they're about to leave out of the country for a couple months. She had thoughts both ways. And what those thoughts felt like to her. For instance, I'm going to be trusting, the builder because it was a new build. I'm going to trust the builder. Well, that feels different if you say, I'm going to trust the builder, or I'm relying on the builder, or I'm buying blind, right? And each person is going to have a different emotion associated with sometimes the same thought. It will feel different to different people. And so then we can kind of argue and mental our way both ways. But when you get to the emotions, the feelings don't lie. Your body doesn't lie.
Yeah, and you should always trust that, right? I mean, the more you fight against it, the more you're kind of never going to be 100% in. If you had to fight yourself to make a deal, there's going to be some problems later. You're not just going to stop all of a sudden you close and be like, oh, it's all roses now. All my doubts are now gone.
Totally. I actually just experienced that. And so I looked back and said, where was it very clear what my intuition said?
Yeah.
And what were the thoughts that I personally used to justify staying in for something that wasn't a hell yes for me? And then now I can use that moving forward.
Yeah, this is really important because I think inside of this is really to take some time, because people are trying to rush to achieve everything, short-term mindset. So pros and cons list, always helpful, but now evaluating the emotions around them means you have to spend a little bit more time thinking. And that's a more mindful approach to making a solid investment. How does it make me feel? I've always said, though, if you're buying a D property and you never want to go there, that's not a good investment, because at some point you should want to go to look at the assets that you own. That's why they're cool. If you're a D property investor and you know what the turnover is like and you know your management, you're going to be there. So I think that people have to see, like, the syndication, I don't need to go see. I'm an LP, but like if I was going to Chicago, I would go look at it. Sure. I'm just not going to take a special trip because they have it managed. But if I'm buying something in Florida, at some point I'm going to go see it. I'm, experienced enough to buy and then show up for the inspection or not, or just show up whenever, because I have people who boots on the ground who I know what to tell them to look for. I know what to look for in the basements, that's it. Yeah. But I think that people really need to take a breath, pump the brakes a little bit, because I think that people get in the thing, if they take a breath, they're not taking action. And it's like, no, you need the breath to take, very, very excited action, to be confident about the action that you're taking. What do you think about that?
Yeah, I love that. One of the things that I would notice is in slowing down to speed up, right? That's the solution. What you're doing currently is creating pressure, and that pressure to speed up is created by you.
Yeah.
I had a client that as soon as she opted out of this more wins, get it faster, how many doors perspective that wasn't helpful to her at all. She was a psychologist and she just her goals didn't align with going big fast. When she opted out of that, she found a property at 30% below market value within a matter of like a month from relying on her strengths, which as a psychologist was relationships. And so that's really the key, is slowing down to speed up, seeing what your unique strengths are. And then my dad always says abusing those. Abusing your strengths, right? Just
use your best parts to their best experience. I mean, that's the way that it's going to make it work. So what do you think one of the biggest things that investors are struggling with just right now from all of your conversations with investors?
I would say it's looking at deals that don't pencil. And
I'll be you for a second. What's their emotion behind that? What is it about the deals not penciling, and then how are they feeling, and where does it take them? Yeah,
I'm thinking about myself actually, because I just got a counter offer yesterday on a $4 million property. So I'm gonna literally let you be the coach.
Let's do it.
When those numbers don't work, there is some recognition of sunk costs. There's also I have looked at so many properties and made offers on a bunch of them, and for some reason, each one hasn't worked out. And so I think there's a desire, you want the numbers to show that they work.
Yeah.
And I have a hard stop where I do not make emotional decisions. I won't.
Yeah.
You have to buy in line with the market. And so this particular market is trading at the numbers say 67 to 70K. And I'm looking at the best 14 comps that objectively I can find and, adjusting accordingly.
Yeah.
Well, I would love to move forward on this property. I really want to. And emotionally, that's my desire, especially because of sunk costs, because of the desire to do a deal.
Yeah.
And also, you cannot do that. You can't make any bad decisions. The number one rule in real estate is don't lose money.
Yeah. And I do think, I mean, obviously emotions play a smart role, but like when you get down to it, I always have a number and I'm just a
Mhm.
very unstoppable negotiator because of my background. Like my number is my number. They can say whatever they want, jump up
Yeah.
and down, show me paperwork. I've already done it. Like that's my number. If you don't want it, I'm out the door. No problem. Won't even think about it again. Are there properties though that I've like, should have bought that one, where we talked about
Mhm.
regret before? I have those, but like you said, that's healthy. Uh, it
Yeah.
didn't meet my numbers at the time. Maybe I was wrong, but I'm not going to cave myself at the time and underdo my numbers because that's going to create short-term regret and me kind of overplaying it. So I do think, again, it goes back to confidence. You have to build up the reps to make sure that when you're saying yes or no, that you've done the due diligence and you're not fully relying on someone else, but that you're using your experience plus theirs to reframe the dialogue in your head about that.
Yeah, that's so true. I will say this. I've never regretted a property that I have purchased. So I invest pretty conservatively. I'm not super risky. I know that there's a capped downside, and I write it up in the way that I can cap my downside almost every time. And I
Yeah.
make sure that there's something in every property that has some upside potential, whether that's you can develop on it or, you can increase the rents with management or you can remodel it or something. But I think when you invest, you don't have to get a crazy, amazing, screaming deal that is the needle in the haystack, but you do want to be in line with the market, with what it is right now, and just understand that over time, there's a bigger gap between the mortgage that you're locked in at, which is a good thing for you as an investor, because you have the option to refinance, but you don't have to, and then the rents that are going to be increasing and the appreciation. Like real estate is a long-term play. It really is. And when you see that vision, it makes you want to play the game.
Yeah, I agree. So personally, where do you want your portfolio to go now? Obviously, you're looking at bigger deals now that are commercial, mostly apartment buildings. What's
Mhm.
been that transition like? Because if you go back and listen to Alyssa's first episode, episode 34, you'll hear about how she bought her first property for like, what, $3,000 or
A
something?
thousand.
$1,000 and
Unreal.
renovated herself as a teenager. But how's that trajectory been? Because now you're thinking bigger and doing bigger.
Yeah, I have had to come to terms with that I want to do it as well as help other people do it. And
Yeah.
that's okay. That it's actually beneficial to my people to have me in the game with them, right alongside them, working with them. And in terms of my portfolio, I'm really seeing multifamily value add BRRRR properties, which are difficult to find, but I have so many connections in this market now that I have people bringing me truly
Yeah.
off market deals that no one else knows about. And I just have an endless number of those to vet. I have several on my docket right now. And so for me, it's like finding the time. And that's going to be my next personal evolution and growth, is finding how I can outsource things, because I've been in that self-employed mentality, and I'm transitioning to the employer mentality, the business owner mentality.
Yeah. Well, let's give one piece of mindset advice for new real estate investors, no, actually, or seasoned, to combat anything that they're dealing with, whether it be FOMO. What's one piece of advice that we haven't talked about that you could give to people before we hop off your second guest episode on this podcast?
I would say it's this: idealize becoming the person who loves doing the boring things.
That's a great one. I've never even, we talk all the time. I've never heard that one. So why? Because I love that.
Well, I learned that a lot from you and seeing how much success you've had and other people that I interact with. The boring things are what...
Oh, wait, you're calling me boring. I understand now. I get it.
Yep, sure
I
am.
am.
No, it's that consistency and the day in and day out devotion to today I will accomplish this next thing that is the next step to take me to success is much less sexy than I'm going to buy 200 doors or $1 million of assets under management. It's so much more interesting for your brain and creating dopamine and positive hormones in your brain to think of those long-term things when it doesn't actually, it's not pencil to paper, the next thing that you need. And so when you're willing to do the boring thing and to take that action and to idealize those people and want to become those people, you take the action, you make the offers, and you're growing, as you were using, out ahead of your skis. You're not out ahead of your skis. You're like growing.
Yeah. I've been using that all the time now. Yeah.
you're growing in sync with where you're at. And so you're making real progress. That's actually another version of perfectionism in disguise, I just realized. Because wanting to be further than you are and thinking that you could take a shortcut path to get there really is perfectionism. So be where you're at.
And yeah, you're never going to get anywhere if you don't do the boring things. If you read two great books, The Slight Edge and Atomic Habits, those are both built on the same thing. You have to do all the boring things day to day to create the momentum that creates the big things. No one just doesn't do the boring. Of course, you can do who, not how and outsource it. But if you're not connected to the boring things, you're going to be missing stuff in. So you have to learn how to do the boring things, because that's a lot of time where you're going to get all of your best reps. You can't just look at the shiny objects and think like that's it. Like you said, it has to be building your own personal reps, whether that be in person, vetting deals. Like say you have 10 deals on your table now, you go through them, none of them pencil. That's not a loss. You just looked at 10 deals and learned something that you can look for in other deals or things that were pluses, and the numbers just didn't work.
Yeah. And be willing to step back and see, really write out, what did you learn from those 10 deals? What terms do you understand better? What numbers do you know better in the market or overall in terms of what you need to meet your criteria, right? So looking for progress every day and everywhere that you are, that learning mentality gets you far.
Well, we've done it again. The first return guest. Thanks as always for coming on. Of course, we talk all the time, but I'm glad we could have this conversation recorded for this episode.
So fun. Thanks so much for having me.
What? Wait, remind everybody where the best place to find you. I know that it's Instagram. It is Alyssa Holbrook Coach, right?
That's right. And LinkedIn is the other place. Just Alyssa Holbrook. I am showing up a lot more there. We both found LinkedIn to be a really interesting place. And I think that is a good place to business connect with people, because it's not as weird as Facebook. You know, if I get a Facebook request from somebody I met at a conference, I'm like, well, that's weird. I don't even use Facebook. But like, you know, Instagram, it's clearly you're putting a lot of great content out on your Instagram. I really do love the Ask Me Anonymously. If you haven't followed Alyssa, follow her at Alyssa Holbrook Coach, and you'll see that in her story, she'll say, ask me something anonymously, and then she'll answer them all, not outing you, but outing the questions. And I think those are really, really good, because I think you're giving people the ability to ask questions that everybody wants to ask, and then you can answer, and then multiple people can benefit by one person stepping up to send that DM. I love that. And I also think because of the specific mindset piece, I'm not going to answer that like most other coaches would. Right. So it's fun. It's kind of, it's even a wild card for me. Sometimes I'll read it and I'm like, let's go this direction today.
Yeah. Awesome. Okay. So LinkedIn and Instagram. Alyssa, thanks so much as always.
Thanks so much for having me, Jonathan.
All right. That was Alyssa Holbrook. I'm Jonathan Green. Our first return guest has now come and gone. We'll see you next episode. Wait, you have reached the end of the show. This is the part where you're going to get ready to check out, but I've actually changed this part. For over 120 episodes, you heard the same thing. Well, now I've changed it. I've thought about doing intros to the next episode, but I'm going to hold off on that for now. These are my pitches at the end. I've got nothing to sell you at all, but I do want to remind you that it really would help us if you support the podcast in the right way. All that means is subscribing to the podcast so you get it on Monday and Thursday, writing us a 5-star review if you believe that we deserve a 5-star review, sharing it with your friends, and being a participant in the Zen and the Art of Real Estate Investing community. Soon there's going to be a new website launched. Maybe when you're listening to this, it's already going to be out there. That's where we're going to have collaboration. You're going to be able to see a lot from the guest. It is coming soon, and I just want to tell you, from me to you, I don't know how I got here, over 100 episodes. I'm so appreciative of you listening to the podcast and especially sticking around to hear this part. We'll see you next episode.